Hi everybody, it's Brady. I'm going to answer a question today that a real estate agent asked me, and that was, what's the difference between a pre-approval and a full loan approval? So I like to break this down into four categories. The first is what I call a pre-qualification, and this is when a lender speaks with a potential home buyer and takes an application, asks them about their income, asks them about their assets, asks them about their credit, and runs numbers based on the information that was given to them by the borrower and says they're pre-qualified for X. That's fine. It's a good start. We typically like our real estate agents to show properties to buyers if they have what we call a pre-approval. Now, a pre-approval is where the borrower actually furnishes information to us about their income and their assets. You'll recall yesterday I talked about bank statements, looking for their down payment money. But we'll furnish information about their income and their assets, and then we'll also run a credit report, and more importantly, we run an automated underwriting program. Now, what that means is we input all the information based on the documentation they've given us. So we've taken that guesswork out of the equation into the loan application, and then we actually run the automated underwriter approval. If it says approve, then all the underwriter has to do is validate that the information documenting their income and their assets matches up with the input into the automated underwriting approval. It takes out 97% of the guesswork if you do what I call a pre-approval. That pre-approval must have the automated underwriting. Okay, third thing is something that a lot of new home builders are asking for, and they're asking for an underwriter credit and income approval. This is the next step. This is after we've run the automated underwriting and gathered the documentation on income and assets. An underwriter, the underwriter who will actually approve the loan, looks at that income and assets documentation, looks at the automated underwriting approval, and then signs off on it and says, yes, I have reviewed the documentation for income and assets, and it is consistent with the information on the automatic underwriting approval. That's typically where you want to really drill down, right? You want to make sure you have the proper purchase price and the proper terms and a locked rate. So builders usually ask for this prior to the final step of maybe pouring foundation or before we're able to order the appraisal. Now, you can't have a full loan approval until the property has been underwritten as well. And what that means is this. You have to get an appraisal done, and the appraisal has to be underwritten by the underwriter. You also have to get a title report, and that has to be reviewed by the underwriter as well. So a full loan approval is where the income, assets, and credit of the borrower have been reviewed by an underwriter and signed off and said that they're acceptable for the loan, and the property information, and that is specifically the title report, the title insurance commitment, and the appraisal has not only been performed, but reviewed by the underwriter. So, in summary, you've got a pre-qualification, good start on a Saturday or Sunday. If you give me a call and you want to show someone houses, that's a good start. A pre-approval, that's where the buyer actually submits the income and asset documentation, and we run an automatic underwriting approval. A credit and income underwriting approval, that's where all the work we've done on income and assets and the automated underwriting approval, the underwriter signs it off. And then finally, full loan approval. That's where the income, the assets, and the credit of the borrower have been reviewed, and the title insurance commitment / title report and appraisal has not only been performed, but accepted by the underwriter. Thanks for watching. This is Brady. Have a great day.